Hey everyone, John Henry here, SlingshotFutures.com, and welcome to the Daily Futures and Crypto Market Outlook for tomorrow's trading. That's going to be the 7th of the month. Overall, volatility pretty good today. We actually had some pretty good movement across the markets, plenty to work with, and that is definitely a refreshing sight to see from the lull that we seem to be plagued with lately in terms of overall movement across the board. So, before we jump into the charts, as always, make sure to swing it over to SlingshotFutures.com, scroll down and click on the Join the Daily Outlook newsletter. From there, you'll be able to sign up on our newsletter list so you'll be notified every time one of these videos comes out. Along with that, in the newsletter itself, we go over different stocks, cryptos, and really anything that's moving. If it's of interest and it's going to take a little bit too long to talk about it in the video itself, it goes on in there. So it's a great way to grab hold of some extra information. If you haven't signed up already, make sure to do so under this link. Along with that, the live trade room subscription and trial info. From here, you can sign up for a free 3-day trial in the live trade room, so you can hang out with us for a couple days and see what we're all about. You can hang out in the room, see the charts, see the screen, see how we're managing things and how we approach the market. It's a really great way to get a feel for how everything works and looks and feels, and if you haven't done so already, it's a great way to kind of see what we're all about. So make sure to sign up for that trial as well. Now, taking a look at the overall movement that we have today, the euro grinding down off of that major resistance. Beautiful, beautiful drop off of that high. I don't think we could have asked for a much better response off of that top. Now that we have movement back down towards the lows, one thing that really stands out is the fact that they have missed the bottom. Now, they haven't missed it by a lot. There's only a little bit more to go. And a lot of times that can put off sellers. They'll be looking at it thinking, well, if there's so much bear strength, why couldn't they finish the job to the new low? What happened? So there might be a little bit of fear from the sellers trying to drive the market lower, and a lot of traders probably look to take profit at those low closes instead, and the ones who didn't are looking at it thinking, wait a minute, what happened? Why is this not going? So in terms of the overall movement to the downside, it looks as though sellers want a retest of better prices, and a retest of better prices, we have a spike down into a spike in kind of flat-topped wedge expanding megaphone. You could also draw it as a channel, and a lot of times when you have that type of formation, the market loves coming back to where that kind of channeling formation afterward began, and that's where they're going to look to jump back in for some better prices. And that's, I mean, if you took it on an average, that would be at around 16,500s or so, either side really, 525 or 425. Inside of there, though, in the middle, right around 500, looking for resistance to start stepping up from the sellers on the euro to push the market back down. Overall, we do have a downside objective, just still looking to get hit, and that's a little bit further down at 15,750. And as long as that remains open, we have a sell side move that is looking to drive the market further down. We just have sellers that are looking for better prices. Jumping on over to gold. Gold is a little bit of an oddball one. Now, obviously, a gorgeous move to the upside. A lot of traders, I'm sure, had a lot of fun in that rally. But the overall move seems to be kind of, I don't know, par and parcel for the way that it's been moving. We have a big spike up or a big spike down, and then it fades off of it, and we're getting it more and more and more recently. One thing that does stand out a lot of times when you have these types of blow-offs is looking back at previous price and seeing what it did. And if we have this last blow-off right about there, that giant bear bar, we could use that as a potential projection to navigate the market as an area of resistance above us. And with TradingView, they actually make it pretty easy. You can just use this little tool right here that is the price range. And we'll just highlight that bear bar right there. And what we can do then is we can take that bear bar, drag this up on top, and now we have a level of resistance above us that could act as an interesting level for sellers to drive in. Not only that, but we do have a blow off on the highs and on the lows right here. Notice how they missed that bottom side? Well, these are equidistant breakouts, or in this case, failed breakouts. They tried to break down to the lows and they missed it. Likely, we have two different options. Either the market wants to blow off equidistant of those highs, or they want to fail equidistant underneath the highs. The same thing that happened back here, right? We failed inside of this range here. That's where they found support. We're looking for the same equidistant move, either above or below. And right now, we're sitting right on top of that, and sellers are finding some resistance here. Now, a lot of times what I would rather rather see is when they miss one side of the trend, they miss the low in this case, I would rather see them break out above. So even though we are responding to a level of resistance right now with an undershoot area, I would rather see them break out higher. It makes a lot more sense for the market to find resistance there instead. Just kind of a way for them to compensate. They miss down here, so they have to overcompensate up here kind of scenario. And that does put us right about at that same area of resistance of the news candle breakout to the upside at around 89.2 or so. So that's kind of what we're looking for. A little bit further lift to the upside. The buyers still own the short term. I'm looking for a blow off on the highs and then looking to sell it right back down again. Over on crude oil, another beautiful rally to the upside. We have already completed major bull objectives to the upside, and that was at 56.92, just ahead of 57, and we are still continuing to grind higher. With this continuation grind to the upside, it's showing that a lot of buyers still aren't done, but along with that, we're getting a little too much too quick, right? It's the same thing that happened back here. This trend has been going on for a while. They start breaking out, they hammer higher, and then they start to peter out and go sideways for a little while. We could easily see that same situation up here. We're getting a monster blow off at the end of a very extended trend, and likely this market is going to go sideways going into tomorrow without a whole lot of movement. Now, what I would really like to see is a dip lower. We have a big blow off on the highs. Eventually, and this might not happen tomorrow, it could happen in a week from now, but an equidistant blow off on the lows would look really, really nice, and that would also put us at around previous levels of support or resistance from those previous swings, and of course you have that horizontal support at 54.46. So a lot of areas that we can work with on a deeper pullback, but for right now, I think the only option that the market is giving us is scalping longs, otherwise sitting on the sidelines waiting for that deeper correction. And we're talking, you know, a good 2-3% pullback here from where the market is so that we can actually start getting some downside movement. Until that happens, I think it's scalp side only. We are very expensive and we are a little overextended up here in my opinion. Over on the S&P, we are challenging the previous double top swing high area, and they have broken out, or at least are attempting to break out. They've already used it as minor support. Minor support in the sense that it broke out the very next candle, or the next couple candles used it and went from there. What I want to see is large support. We have that big level. They can do stuff like this. That's fine. But I want them to break out, prove that they want to break out, then pull back and use it from there. That's usually where you get the much better responses, and that would be more what I would be looking for at this point in time. If this fails, if this can't sustain that area of support on a pullback, we're likely going to see something like this where it breaks down and we can use it as resistance to drive the market lower. We aren't really making very impressive highs up here. We broke out above the highs, kind of snapped back down. We broke out above the highs, it snapped back down. We broke out above the highs, well, yeah, probability would dictate that we're just going to snap right back down again. And you'll notice on every single one of these, when it broke down, that level became a nice zone of resistance for at least a couple hours. So I'd be looking to utilize that exact same thing here as well. Otherwise, though, the S&P, yeah, it's going to be a little bit tough to want to be a buyer up here. Probability would dictate that we have a break back down again, and we can use this area as a level of resistance. Hard to want to be a bear for too long, though, in this on the indices as a whole, really. So just kind of keep that in the back of your mind, too. Now, taking a look at the news for tomorrow, we do have a couple things coming out, most of it for out of the U.S., but at 4 o'clock out of the Eurozone, we have the ECB President Draghi hitting the microphone at 4 o'clock in the morning. At 10 o'clock out of the U.S. session, the JOLTS job openings for September, forecasted at just above 6 million. Looking at 12:55 out of Canada, we have the Bank of Canada Governor Paul speaking. And then at 14:30 Eastern Time or 2:30 Eastern Time, that is going to be Fed Chairwoman Yellen is speaking. So it's going to be a little bit of a kind of an oddball one tomorrow. A lot of the big news or a lot of folks that are waiting for the big movement usually happens on Yellen. And that doesn't happen until the afternoon. So 10 o'clock does have some movement. Probably not going to be as big of an impact, though, and a lot of people are kind of sitting on the sidelines waiting for Yellen to hit the microphone to see what she has to say. So outside of the news, that's going to be the outlook for the future side of things. Let's jump on over to cryptos now. We have the crypto sphere with Bitcoin pulling back pretty heavily. We had an overshot of the highs. Bitcoin found to be a little overextended up on top here, and this is what we've been saying for quite a while now. We haven't really had that healthy pullback, and a healthy pullback, well, we've got a little ways to go yet. Healthy pullback to the lows of that big monster kind of blow-off back and forth candle is at 67, 69, 74. we can get a little bit more juice to the downside, 66.52, and then if they really want to pull back, of course, that big round 6,000 again. Doubtable that they're going to go that far, and if they do, a lot of buyers are going to be pretty pumped about buying it on a deep correction lower like that. Chances are we're probably going to find a bounce off of 67.69 or 66.52 ahead of that. Either way, though, we do have a nice bear trend working its way lower off of the highs, and likely an ABCD pattern type of continuation that puts us right between those two zones. So looking for a little bit further price dip on the Bitcoin market for a better price between 67.70 down to 66.50. Looking at Bitcoin Gold, we did complete the objective to the upside, finally rounded off of 170 and pulling back. Major support level, just like we were talking about really on the S&P, kind of the same thing. We're breaking above this high. If this begins to fail and it doesn't snap back soon, we're going to have a lot of buyers who are left holding the bag who probably bought up here, and they're going to be just hoping that the market comes out so they can get out of break even, which means that there's even more selling pressure. A little bit nervous right now. This is the tipping point for Bitcoin Gold. If it starts breaking down any further, then we're looking to use this area as resistance and drive the market down for some better prices below us. Same thing goes, same level, hasn't changed, 117.26. You might be able to adjust it a little bit further down to maybe 113 or 114, but either way, inside of this band is the major level of support that a lot of buyers are going to be looking for, and if it dips below that, then we've got 92 as well, not too far below that. A lot of these offshots, these forks off of Bitcoin, they're going to be a little bit weird, especially going into SegWit 2x, which isn't too far away anymore. We seem to be getting closer and closer, and well, the closer we get, a lot of these forked currencies like Bitcoin Cash, like Bitcoin Gold, they're going to be a little bit of a weird kind of mover. We can see Bitcoin Cash hasn't really moved out of this for the most of October, and Bitcoin Gold, we might just see the same thing happen. It just goes dead sideways and doesn't have anything going for it for a little while here. So we got to play these a little bit safe while we're waiting for SegWit to come out. But aside from that, overall looking for this area to be the line in the sand. We could use it as resistance if the buyers don't start picking up soon here. Over on Ethereum, surprise, surprise, still floating around 300. Not really much has happened here on Ethereum. Very calm, very quiet, not much happening. And, well, so far we've cycled off of the 78.6 of the bigger swing, and then after that rally to the upside, which is a gorgeous rally, we cycled off of the 50%, following up with another good rally. So the buyers still are obviously interested, but they're not interested in buying very high because the breakout moves aren't going very far. You have the initial break, but then after that, it just kind of falls on its face. Same thing goes here, right? We have a big bounce off of that major area of support, and then the attempted breakout either fails or doesn't go very far and turns right back around again. So buyers are trying to buy cheap. And the one thing that does stand out here on Ethereum would be the possibility of maybe a 3-push wedge bottom low. And depending on when it comes down into that area, that could line up really nicely with not only the 61.8%, but also these previous swing highs acting as support, and the swing low from earlier acting as support as well. So a lot of stuff stacking up at around that 290 area for a continuation bounce back to the upside. Right now, we're kind of in no man's land. I would rather wait for some better prices or wait for it to break out and buy the next pullback. And then we've got Litecoin, another one that really isn't much of a surprise, floating right around 50 to 55. It hasn't left this area for quite a while now, and, well, for the most part, we just need to wait for a little more info. They missed the buy off of 50%, which could show some aggressive buyers that are scaling in a little bit early, not allowing the market to really pull back much further, and it seems as though they tipped their hat in favor of the 53.70 level of support once again. It is a big level of support, and so far it's acted really well. We do have a potential bear trend driving its way lower. Arguably, it would have been more like this, and you know, they tried breaking out of the bottom and it failed. This could be the compensation for that failed break down for a break up, and if that is the case, then this might roll over and push right back down to the lows again. But I can't ignore the fact that we have a lot of things lining up here with the previous swing highs and swing lows, and a retest of an actual test of 50%, I should say, for that pullback and the low side of that major support. Everything is still looking good for a long-term buy here on a better price. I want a little bit more of a dip here before we go too crazy. Over on ADA, finding a little bit of a floor here. They're putting in some balance around 290, just under 290, finding a good amount of floor for the market to kind of prop itself up on. We have had a pretty big drop lower on ADA, and for longer term buyers, that's awesome because that just means that you can buy more cheap. But for short term traders, this kind of move is a little bit tough because, well, really the only option is assuming that there's going to be a secondary leg to the downside. So where do you get in? Well, likely the next option that we have is going to be at a new low and down into 250. That would be about half off from where we initially were at around 500, and that would be a very nice pullback for buyers to find if we can get a little more continuation down and retest the lows. Down into that 250 area, longer-term buyers are going to be having a heyday at that very, very cheap price for ADA. Again, long-term, I am still slowly building in more and more and more ADA myself, just because I have a lot of faith in long-term for ADA, but aside from that, well, it's just a waiting game. We're going to have to give it more time. And then over on ETP, ETP was listed on HitBTC. We still have a lot of the bear sellers, the margin sellers, the big, right, the big sellers are still trying to hold the market down as best they can. But, well, they're not doing so well. They failed to make new lows. They're having a hard time here. And now we're forming a large area of support from 275 up to around $3. So if we can find another dip into this support, or maybe one more new low, that would allow a lot of buyers to get in on a trap low, trap out a lot of the weak buyers, and that should allow the market to lift back up to around 359, if not a little further up to 450. And now that we have HitBit on the back end with US traders coming back into ETP, it's looking pretty good here for ETP, again, in the long run. This is a longer term play as well. On NEO, oh man, NEO is a train wreck right now. It hasn't moved hardly at all. We haven't gone up, we haven't gone down. We're just cycling off major levels of support, so I guess it's just going to be the way that we're going to have to trade it for now. 23.16 is a low support target at 26.21. If we can hold 26.21 and break back above it, using that as support and targeting 31.83. Those three levels are just really pinning the market down, and it's having a hard time going anywhere. So until then, we'll just keep using them support and resistance. So outside of that, though, that's going to be the outlook for tomorrow's trading. Really, the big one that I'm keeping my eye on is a dip on Bitcoin. I would love to see a dip down into the 6,700s or so for potential longer-term buying pressure to shove the market back up over the coming week ahead of us. But that's going to do it for this one. Hopefully you found it interesting and a little bit useful, and something you can add to your tool belt for tomorrow's trading. Now, as always, it doesn't matter what market you're approaching, what market you're trading. Always, you need to have a plan, so make that plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see you all then.